Okay.
Hi Phil, thanks for joining me on this Friday afternoon. We were having such a good chat about freezing repayments that I thought we might share it with everyone. So can you tell me more about what all these lenders and all this media actually mean when they say freezing or deferring your repayments?
Yeah, thanks, Stacey. Thanks for having me along. Freezing repayments, in my opinion, is most probably the wrong word to use because the perception out there for a lot of people is to just stop and not do anything about it. I would rather use the term deferring repayments. And what it means is that the banks and the lending institutions have come out to support borrowers in helping them through this time of hard crisis needs, through the loss of jobs, reduced hours, and many other reasons. So they've given them the opportunity to, providing they qualify, they have to qualify. So if they do qualify, they can put their repayments on hold for a maximum period of 6 months. So what that means is their interest on their loans, which they generally make in their normal monthly repayments, will be added to their loan every month. So if they make no repayments at all, at the end of the 6-month period, the loan is effectively going to be the current balance plus interest on interest on interest on interest on interest. At the end of that 6-month period, the lender is now going to ask you to start repaying that back. Now, there are a couple of options.
Yeah, so the lender's going to ask you to repay it back. Will that be a higher repayment, an extended loan term? What does that look like for somebody?
Yeah. I believe the lenders are going to understand the individual's needs and circumstances. Some people may be in a position where they have had their loan running for a long time already, and the lender may be comfortable to renegotiate the loan back out to the original term. So usually a loan goes for 30 years. And if the loan has already been running 10 years, the lender may decide, if it is the best option in the example, to extend it back out to 30 years so that the repayments of that entire 30-year term covers the existing loan plus the deferred interest that's been added to that loan over the last 6 months. That's one option. Another option will be on the remaining term of your loan, so they may not be in a position that they can extend their loan back out to a 30-year term. The lender would be expecting that in the remaining of their contractual term, be it 15, 20 years, that they will pay the loan back plus the accrued interest that's been added to the loan. What that means to the borrower is they more than likely will be paying additional repayments to what they've been used to bridge back that extra interest that's been added to the loan.
Okay, so that's a great option for some people that might really need it. Are there other options for clients who maybe don't want to end up with a higher loan balance at the end of the 6 months or don't want to have higher repayments? Are there other things that we can do for them?
Yeah. Firstly, you're not alone. So I would encourage any mortgage holder to not feel that they can't do anything. So pick up the phone and speak to their lender or bank or mortgage professional. Understand what's important to them, because there are many people out there that want to pay something. So we may be able to negotiate with the lender that they just meet the interest payments for a period of time and not just jump into this relief package that the government's automatically handed out. That is really a last resort, in my opinion. It's the last resort if everything else has been exhausted. So, we might go to the lender and go, okay, is interest only an option for my client for the next 2 or 3 months? There are other products that lender may have that might help them in terms of their repayments. Looking at their loan, is it fixed or is it variable? Some of the fixed rates, and especially with the relief package, are quite low at the moment. And that could be a solution for them also. But before we jump into that, we really need to understand what's important to the borrower, what their short, medium, long-term goals in, because there are a lot of restrictions on fixed rate loans, and there are a lot of advantages and disadvantages of having a variable rate loan. So we just have to make sure that the client is well informed before they jump in.
Thanks, Phil. That was really helpful. If anyone has any questions, feel free to instant message us if you see this on Facebook. Contact one of our award-winning team. They are more than happy to look at your individual circumstances and run through what could possibly be the right scenario for you. Or if you just want to talk to someone because you're feeling financially stressed, just call us and we are more than happy to help you. Thanks, Phil. I hope you have a lovely Easter break.
You're welcome.
I'll see you next
Thanks
week.
a lot. See you, Stace. Bye.